10-year note yields closed the week out hovering at 424. It's roughly unchanged on the session and down about 8 basis points on the week. Now, we did have the FOMC meeting on Wednesday, along with the Fed Chair's press conference, which did give a dovish tilt and actually push yields lower, but ultimately seeing them trade off those lows ahead of the weekend and closing today, again, at 424, unchanged on the session, down 8 basis points on the week, but up from the weekly lows. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. You will notice that volatility was higher today as we head into the weekend, as there are a lot of uncertainties that weren't answered at the Fed's meeting on Wednesday. Clearly, a lot of geopolitical tensions and geopolitical risks, as well as global and central bank risks, still elevated and pushing volatility higher as we head into the weekend, as yields were basically unchanged on the session. Lastly, let's talk about what we have next week. Well, next week we get the PCE data. That's the Fed's preferred inflation gauge. We also get the global PMIs, as well as a 2, 5, and 7-year auction, along with a 2-year note floating rate auction. And then we get Fed speakers back out and about. Fed speakers have been on hiatus during the March FOMC blackout period, but started speaking again today, and we'll continue that next week.